All right.
Happy Friday.
Oh, no kidding. I've been ready for Friday to come.
Oh, but you got to talk about PPP forgiveness first.
Hot diggity. All right, Pam. This is a topic that, wow, there's been a lot of change. There's been a lot going on, just kind of everything. And I think you came prepared today, right?
Oh, absolutely. I am so prepared, right? I'm ready to go.
That's what you need. I mean, this application's crazy.
The stemware actually has the corporate colors in it.
Yeah, we have to love the branded stemware. All right. So I'm going to give it like 2 more minutes. We've got a whole bunch of people still joining. I'm watching the counter kind of click up. So, yeah, this has been kind of intense, and it's been going on. And every time we think we get our arms around it, something changes.
Yeah, and we know that the change isn't done, right? Because we just got new information just a few days ago.
That's right. It is. Well, we got new information a couple of hours ago because I don't like being up on the changes. Trump actually signed the latest legislation. So.
Well, I know we have a lot to cover today, and it looks like our participants have stabilized here a little bit. So,
okay. All right. So let's talk about our agenda today. All right. Here's what we're going to do. We're going to do a quick loan review because, as we said, things are changing. We've got to go over all of that. Did it change for you?
Nope, I'm still seeing the first slide.
All right. Let's resume slideshow and see what happens. Hey,
there we go.
All right. So here we are. This is the plan. So we're going to go over the loan because things do keep changing, like, all the time. So we're going to go over the loan. We're going to do a quick review. We're going to do the PPP versus the EIDL. We're going to go over the EIDL uses. I mean, the PPP uses. We'll blow through that. Then we're going to go over the forgiveness rules because those are some of the things that have changed today. And then we'll go over the actual PPP forgiveness app and how to do all the calculations. So I've got a couple of things to say. One, a disclaimer, things change every day. This is the information as we know it at this particular moment. Could change, but for today, this is what we've got. And number 2, if you start to get overwhelmed, because we're going to get into some detail, we're going to really look at some stuff, don't worry, we've got some options that'll kind of help you out and keep you going and make this a little bit more of a manageable process. Whoops. All right. So let's go over a loan review. First, originally, PPP loan was 2.5 times your monthly 2019 payroll. There was a $10 million limit, 1% interest rate. That fluctuated a little bit. They landed on 1%. Repayment would start in 6 months, and it was a 24-month term. Pam, you want to talk about the changes?
So earlier this week, they changed the forgiveness period, the covered period, and they extended it. So it looks right now that your covered period could be, and we'll get into this in more detail, a variety of options. They extended the program from 6/30 to the end of the year. And there still are PPP funds available. So if people haven't applied, you can still get new PPP. So originally you had to consume it in 8 weeks, and now they give you the option of 8 weeks or 24 weeks. If you get the money after June 30th, then you just have till the end of the year to use the money. The loan term's 5 years. You get you start repaying it after the SBA approves your forgiveness. And everyone who got the EIDL grant will still have a loan balance, and we'll get into that. But then the payroll portion changed. Before you had to, before this week, you had to consume 75% of it on payroll, and now it's reduced to 60%. So they've given you some more options, but I think that, and we'll get into the details, the devil is in the detail, because it's not, you don't necessarily want all of the longer periods.
Yeah. All right. The EIDL loan, just as a quick refresher, it's operating cash. You got an upfront, they called it a grant, they called it all kinds of stuff, depended on which piece of the document you were looking at, but you got $1,000 per employee, basically, for signing your,
So EIDL stands for Economic Injury Disaster Loan, which is also another SBA facility, right?
Yeah. It was a max loan of 150, down from the original 2 million. Repayment started in 12 months, interest rates 3.75%, and a 30-year term. This slide I love, and just so you guys know, we're going to send, we'll send this reporting out so that you can actually look at some of this stuff. But this is a great visual from the SBA that talks about the different loans and how they should be used. So just as a reminder, the PPP was for payroll and approved operating expenses, no collateral. You can get 100% forgiven, which is kind of not true. And if you look over on the EIDL side, it says the first 10K loan advance will be forgiven. Not quite true. I mean, it is in some cases,
but not in all.
But the way most people have it, and I think that when they created this, you couldn't have an EIDL and a PPP, and they changed that. Now you can have both. So, done some stuff. All right, let's look at how you can use the PPP loan. Payroll, commission, and severance, state and local taxes, and this is really important because, Pam, you can't use it to pay any federal employer taxes, right?
Right. So it's the state and local taxes that the employer pays. It's not the state and local taxes that are withheld from the employee's paycheck.
Employer benefits, rent and leases. And I want to talk about leases for a moment. I know a lot of people that lease their copier. That is a valid lease.
Or you can lease equipment if you're a different kind of business.
Right. So when you look at lease, don't just think about the lease for your office. Think about all the things that you lease. I know people lease phone systems. They lease major equipment. Anything, they lease cars.
Mm-hmm. If you have a fleet, yeah.
You know, so those are all viable things. Mortgage interest, be very clear. It is interest, not everything. Okay, you can't pay your whole mortgage with it, but you can pay the interest. And then the last one is utilities, and we'll get to the question in just a second.
So we have a question in the chat.
Can we hold on? Can we hold on and finish this slide, and then we'll do it?
Yeah, it's about this slide. So yep.
Oh, okay. But utilities is the last one. And it's interesting because I had a utility discussion with somebody who asked if utilities included, I said it includes your phone. And they said, well, what about our phone answering service? I'm like, that does not count. They were pretty specific in saying they defined utility as bringing the utility to you. So if it runs across a line, so like your phone, your electricity, your water, anything that's brought to your location. So you want to do questions?
Yeah, so two quick questions, right? So one is, how about leasing server space, like cloud space? You know, that could fall into a lease, it could fall into a utility.
Oh, wow. I don't know. What do you think?
I guess my question would be, you know, what is your business? I could make an argument that you could include it. But, you know, particularly if that was the backbone of how you run your business. So.
Yeah. And to kind of pile on to that, I do think you need a lease agreement from them.
So we're getting a lot of questions here, Brooke, and the easy ones I'm just going to go ahead and answer in the chat and the question and answer. People are asking about, they're just asking about a lot of things. So let's keep going. Let's go through this, and then we'll come to questions that I think are worth bringing up to the group. But there's a lot of questions and answers that I'm going to be actively sourcing here.
Okay, well, I'll do a couple really quickly. There was one that asked if you could repay any of these loans early. Yes, you can repay all of them early, and there is no prepayment penalty. So that's a great thing. And I did see that somebody raised their hand earlier. If you could just put your question in the Q&A, that would be great. And we will, you know, I didn't say this earlier, we scheduled this for an hour. If we need to go to an hour and a half, Pam and I can both do that because we do want to make sure we get questions answered. Okay. How do I get my slideshow going again? I said yes, come on, there we go. Okay, whoops, it was slow. All right, things you can and can't do with your PPP. You can pay any outstanding allowable expenses that are past due. So, you know, one of the things we told our clients was to slow walk their April rent, right? So they could pay, at that point it was 8 weeks, they could pay April, May, and June rent. Things you can't do is prepay any expenses or payroll, though there's a slight caveat to prepaying payroll that we'll talk about. Wait, can we go back to, can I answer a question that I see because I want to talk about it?
Okay.
So someone asked if we can confirm that it's only mortgage interest and not loan interest and credit card interest. So they said that you can pay interest on loans on fixed debt. So you can pay, if you have bought a piece of machinery and you have a loan on it, yes, you can pay the interest on that loan. But no, you cannot deduct your credit card interest because that is not fixed debt, that's revolving debt. So, all right, on May 22nd, they came out, on May 15th, they came out with the forgiveness application. And on the 22nd, they came out with yet more interim final guidance. And I love that it's interim and final. And they had some clarifications. So we've got a couple of asterisks on here because it was accurate as of a week ago, but like I said, we have new legislation today, so things have changed. So one of them is you can rehire or restore people's pay by 6/30 and not get dinged on your forgiveness application. So if you have someone whose pay you have cut by more than 25%, you will get dinged on the amount that can be forgiven. As long you can get dinged. If you bring them back up within 25% of their original, then you don't have that. Same with rehiring. If you need to get, everyone's been talking about FTEs, we're going to talk about FTEs some more. If you need to get your FTE count back up, if you rehire people by 6/30, and it doesn't have to be the same person, you can hire somebody else, but if you hire people back up to that level. One of the things we thought was great, bonus and hazard pay are forgivable. We weren't entirely sure that this was going to be the case. I know that a lot of you have employees that are coming in and you're like, I need to pay them a little more because they are, you know, kind of hazardous work right now. And a lot of people are paying out bonuses because they want to reward those people that have gone the extra mile during this time. Here is another one. So this goes along with the first one, where we have that date of 6/30. So that changed, and you can choose to rehire by 6/30 or 12/31. Owner-employee pay is capped at the lesser of 8/52 of your 2019 total comp, or $15,385, whichever is less. So for instance, if you, and I'll be totally transparent, I have taken an S-Corp election with this company, so I have to have a reasonable salary. Well, my reasonable salary is fairly low, and I take the majority of the money, the majority of my compensation is taken as draws because it's more tax efficient. So my salary is only about $50,000. I cannot go in and double my salary to $100,000 during this period, because I am capped. I am actually capped at 8/52 of last year's pay, which means I'm capped at about, $7,600. So just kind of be aware of that. What we don't know here, and I didn't put another asterisk, is people who choose the 24-week period. We don't know if your salary is going to be 24/52, capped at 24/52, or capped at, I don't know, 50,000 approximately. I am guessing that they're going to keep it here, but that is totally a guess. All right, I'm going to answer another question that I happen to see. Can you pay interest on a business line of credit? No, it's revolving credit. All right, rules about forgiveness. So here are some of the things that have changed and some things that you need to know. If you spend less than 60% on payroll, you're not going to be 100% forgiven. If you reduce your FTEs, your full-time equivalents, if you either fire and lay people off, or if you reduce their hours, you won't get full forgiveness. And the third way you have a reduction on your forgiveness amount is to reduce salaries. All right, let me clarify that a little bit more. I know Pam is like going 1,000 miles a minute answering all these questions. So if you reduce a person who's making $150,000 to $100,000, this does not apply. Okay, this is people that make $100,000 or less if you reduce them more than 25%. So you can take that employee that was making $200,000, drop them down to $100,000, the government doesn't care. If you then drop them down an additional 25%, if you drop anyone who was making over $100,000 down to $75,000 or less, that's where they're going to care about it. If you take a $90,000 person, you cut them by 25%. If you take someone making $15 an hour and you cut them 25%, that's where you're going to start to see some pain on your forgiveness. Okay, there are exceptions to the exceptions because this is the government. Okay, so you want to keep your FTEs up whenever possible, but some people are having a hard time doing this. So the first thing is an employee is refusing to come back. If you offer a person their position back at the same pay, same hours, and they say no, you actually get to count them as an FTE, all right? If you fired them for cause, if they resigned, I had someone who's like, I'm not gonna get all my PPP forgiveness because I had 2 employees resign. Actually, you will. If you can get the money spent, you won't get dinged on the FTEs. If they volunteered for reduced hours. All right, now these are 2 new ones. So those 4 came through with the May 22nd interim final guidance. The legislation that was signed today gives us 2 more ways to get our FTE count up. And they are, if you can't find a qualified replacement, then you get to count that non-person as an FTE. And also if you have an inability to return to business. So I think there's some people on here that own restaurants. Okay, you have not been able to come back. Texas, I think tonight goes to 75% occupancy. I don't know. I don't know when we went from 25 to 50. But if you're in a situation like that, if you are in a town that, like some of the places in California where you were absolutely under, stay-at-home lockdown orders and you couldn't leave, if there is some kind of government intervention that means you can't return to business, then you're going to get some help with your FTEs. All of this must be documented in writing. In writing. Hey, and Pam, you just answered an FTE question, and you answered just to the two of us.
Oh, I'm sorry.
That's all right. I'm monitoring all kinds of stuff.
Okay, keep going. You got to stay on. There we go.
I'm staying on track. All right, it's got to be documented in writing. If you offer that person a job and they say they don't want to come back, make sure you've offered it over email and they have emailed you back, and you keep that email in your hot little hand, because you're going to have to prove it. Okay, 56 days was the magic number. 56 days from the day you got your loan funded is day 1 through 56 days. That's your 8-day period, your 8-week period. You had to make a couple of decisions on your payroll period. So it could either be the 56 days, or if you pay biweekly or weekly, your 56 days for payroll only, because we're talking about your covered period. You've got multiple covered periods. You've got the covered period like for your rent and all of that, which is the 56 days, no discussion. And then if you are biweekly or weekly, you can also have your payroll covered period, which can start on the date of your first payroll after you got funded. Okay? So if
Clear as mud, Brooke.
All right, here's the deal. If you're semi-monthly or monthly, if you pay once or twice a month, then your payroll period's the 56 days. Day 1 is the day you got funded. If you are bi-weekly or weekly pay, which means you pay every other Friday, you pay every Friday, then you can choose an alternative payroll period so that you can get more payroll in. Then they came out today and extended everything to 24 weeks. So now we have a 168-day option if you're semi-monthly or monthly, and the same with being able to shift your payroll if you are bi-weekly or weekly. Okay, Pam, I want you to talk about the 8 versus 24, whether we should choose, because you've got an option, right? They extended.
Well, and this gets to be
weeks.
that we don't have, every time that Congress passes something and the president signs it, weeks after we get guidance and interpretation from the SBA, because it's clear as mud. We suspect that you will have the choice of either 8 or 24.
Actually, we know that. That was in the legislation.
Right. But what we don't know is how your FTE calculations, which we haven't talked about yet, will be modified if you choose the 24. It could be a situation where you're better off to file just on the 8-week information. I'd like to frame this a little. I have yet to see a date by which you have to apply for forgiveness, right? So even if your covered period is 8 weeks that ends this week, you don't have to apply for forgiveness tomorrow, okay? Or the first day after it. You can wait a little bit and evaluate if you want to use the 8 or the 24 weeks, okay? And I recommend that you think about that. There are businesses that we've consulted with that have consumed it in the 8 weeks, and as soon as their 8-week period is over, they want to let go of their employees because the business doesn't support that. If you've consumed it, I I would guess that you want to apply, if you've fully consumed it and you don't have any reductions based upon payroll reductions or FTE reductions, so you're going to get all you're going to get in forgiveness, then apply sooner. But if you don't know, or you need extra time to spend that, or you need extra time to get your FTEs to be a fully forgiven situation for you, you're going to want to wait and see if 24 weeks gives you more advantage. It really depends on your business and how it's been impacted by COVID-19. But we won't know exactly the parameters and how you recalculate everything until the SBA gives us another set of guidelines and interpretations of this amendment that added the 24-week option.
And something that I don't know if you said, there are some cases, there's some businesses that we've talked to that aren't going to spend all of it in the 8 weeks, but they want to get rid of people and they want to do it sooner rather than later. So it's better for them to go ahead and eat part of the loan and have to pay it back than use all of the loan over the 24-week period, have to fire some people and get dinged on their forgiveness percentage because of their FTE.
Right, because it still is 1% money, for 5 years now, right? So
yeah, I mean, it's inexpensive money. And somebody asked if we have to wait the full 24 weeks to apply for forgiveness. And honestly, we don't know. That's what we're waiting for. The legislation says you can choose one or the other. It does not.
You can't choose a number between.
Yeah, we don't know that you can choose a number. We don't know that you can choose 17 weeks because that works for you. I talked to my banker day before yesterday. I'm going to give a big shout out to Brandy at Frost. She's incredible. Frost is a regional bank down here in Texas, and they're awesome. And in fact, they made CNBC because on the first day of round 2, they did over 10,000 applications, got approved through the SBA. Bank of America had 1,000. So, and Brandy is on the 12-person PPP team in Texas. And so, where was I going with this? I was going somewhere.
You talked to your banker.
She said that the way it works at Frost is when your 8 weeks is over, a portal will open up if you log in. So I'm guessing that, I don't know what happens if you choose the 24-week option. Okay.
But we should know in the next couple of weeks.
Yeah.
Who knows?
They'll give us more interim final guidance pretty soon.
Mm-hmm.
All right. Let's move on to filling out the application. All right. Are we ready? So.
Oh, I'm ready.
Get your drink. Everybody. You might need something stronger than wine. You might need, I don't know, a bourbon on the rocks.
Mm-hmm. Keep going.
So this is the information you need to gather about your employees. You need their name, the last 4 digits of their social security number, each gross paycheck amount for every single employee, every single payroll from 2/15 of 2019 through 6/30/2020. If you need to know how many hours each employee worked for each of those pay periods, and you need to know whether the people are hourly or salaried. If you don't know how to get this information from your payroll provider, you can go on our website. We have a new section to our website called, go to cathcap.com/PPP Forgiveness. And you can download the 3 major payroll companies. We tell you how to get the reports. Let me warn you that all of the payroll companies developed reports that they thought were going to be great before the application came out, and none of them give you the information you need. So what we have tells you how to build the reports and get the information. Okay. Oh, look, those had checks. Okay. Filling out the application.
Here we
easy 22-step process. All right, so first of all, don't start from the front. I think that, you know, that's our inclination always. You start from the front, you read page 1, and you fill it out, then you go to page 2. Don't do that. You need to start on page 9. Okay? So
9 to 11, yeah. Mm-hmm.
Go to page 9, which is this page right here. This is what it looks like. And you need to fill out all the employee data. Now realize that they only give you 7 lines on the application. And I promise you, if you have employees over 8 weeks, you are going to run more than 7 paychecks.
Right, but you're going to be applying for this on the portal that your bank has. So it's likely that your bank's going to let you upload a Google Sheet or an Excel spreadsheet, right?
Yes, because you're going to have to create a spreadsheet to do all these calculations for you and upload it. And if that is intimidating to you, we've got one. You can go online and get it from us. Okay, so employee name and employee identifier is the last 4 digits of their social security number. Please be careful that you don't give out their actual whole social security number. Okay, so once we've got that done, now you need to determine your payroll covered period. Pam, do you want to talk about that?
So this goes back to whether you're semi-monthly or monthly or you're weekly or bi-weekly. If you're semi-monthly or monthly, your covered period is the 56 days, with day 1 being the day you got the funds until the end. And then you can use a calculation that's called incurred payroll. And it's kind of like accruing for that last stub period that you have. If you're an alternative, if you're more frequent, right? So weekly or bi-weekly, then you can shift your covered period to the alternative covered period, which starts on the first payroll date after you got the funds. So,
okay. And then you're going to insert cash compensation by pay period, and you're going to add it all up and put the total in box 1. Hold on. Not letting me resume my slideshow. All right, so cash compensation. And again, you're going to want to put cash compensation by check. All right. You guys doing okay? All right. The next thing you want to do is determine your best FTE calculation method. There are 2 ways to calculate the full-time equivalency. There's the, I don't know, do they call it the simple method, I think, Pam?
yes,
Where,
the simple, not so simple method.
simple, not so simple method. If they worked 40 hours or more, you get a 1. If they worked 39 hours or less, you get a 0.5. So this is interesting. If you have people that don't work, that aren't full-time salaried, you're going to want to look at this. And it was interesting because I looked at it for our company because I've got, and Pam, I've got the forgiveness application working on one. They're going to do, like, I have a bunch of part-time people, and I have some very part-time people, like my social media interns that are working anywhere from 2 hours a week to 10. And I thought, okay, this is interesting. Which way would work better for me? Because it might work better for me to say those are all half a person. The other option is you take literally the number of hours they work each pay period and divide it by the hours in the pay period. So if it was a 2-week pay period, you divide it by 80.
Well, but assuming that an FTE is 40 hours.
An FTE has been federally mandated at 40 hours. So if your work week is only 35 hours, you are not going to have any FTEs that say 1, okay? They're all gonna say 0.8. So you have to figure out during your covered period.
And your reference period.
Well, we haven't even gotten to reference period yet. This is just for the covered period. And the easiest way to do it is to add up all the hours, divide by, 40 times the number of weeks, which is 8, and see what number you get. And when you do that, it goes in box 2. See box 2 down there? You got to put the average, and they want to see this work. They want to see the average FTE calculation for every person for every pay period.
Right, and the application requires the application, Schedule A, and the worksheet for Schedule A. There's no shortcut in this.
Hold on one second. Okay. Moving on along. So we've done that. All right. Now we start coming to the pay reduction. And remember when I said if you reduce their pay more than 25%, then you have to disclose that. So this is where you do it for every employee for every pay period. Did you reduce it more than 25%? And that goes in that last column that you see. All right. Because what you're trying to determine is if your salary safe harbor was met. And Pam, I'm going to have to go to my paper application here. What was I talking about here? Yes.
So
So you're going to do was pay reduced more than 25%? You're going to put that amount in that final column and add it up. And then the safe harbor is where you get to start. Oh wait, salary safe harbor?
I think it's an FTE safe harbor.
I think it's the FTE safe harbor, yeah.
But as long as you, again, when we had just the 8-week period, the FTE safe harbor said that if you got your FTE number back up to your reference period, which there's 3 reference periods that you're allowed to choose from. If you got it back up by June 30, 2020, then you were safe harbored and you wouldn't be impacted by the FTE reduction calculation. We don't know if that FTE safe harbor, if you choose 24 weeks, will be 12/31, 20, 6/30/20, or the last day of your covered period. That's some of the advice that we hope is coming out from the SBA in the coming days.
And so somebody just asked a question, if they choose the 8-week period, they could still get forgiveness and fire everyone on July 1st? Yes. I fully expect unemployment to go up on the 1st. Okay.
That being said, right? Well, okay, keep going. I won't disagree. I want to respect people's time.
I know. We're trying to get through this. Okay. So now that you have filled out all of that work and you have filled out this one thing, that is all you have done. Okay? That one schedule. So now you have to repeat it for employees. Yeah, get your drink. Repeat the entire thing for employees who make more than $100,000 a year. That's this, okay? So you go through the exact same thing. You don't have to worry about whether you cut their salary or not, because this is assuming they're still making more than $100,000. If they're making less than $100,000, they need to go on that last one, okay? All right. Now you need to get a drink. Because so far, we've done 2/3 of an 11-page application. All right? Pam, did you already drink the whole bottle?
I mean, Brooke, let's keep going here because this FTE thing.
All right. So
We talked
calculate
about the FTE safe harbor.
the FTE safe harbor. There are five steps to this. Okay. The first one is you calculate your FTEs from 2/15/2020 to 4/26. We've talked about how to calculate FTEs already, right? We've already calculated them during your 8-week period or your 24-week period, whichever period you choose.
Or
So
your alternative covered period.
or your alternative covered period, right? But it's going to be 8 weeks. We're just going to say 8 weeks, knowing that you could choose a 24-week option. All right, so you calculate the same exact thing for all of your employees for 2/15 to 4/26. All right. Then you calculate the same thing just for the pay period that includes February 15th. I have no idea why they like this date so much, but they do. I also don't know the 4/26 date, but hey, we're going with it. All right. Now, if step 2 is greater than step 1, you move to step 4. If step 2 is smaller than step 1, you go to step 5. So let's say step 2 is greater, so you had more on 2/15 than you had between 2/15 and 4/26. In that case, enter your FTEs as of 6/30. And if step 2 is smaller than step 1, divide line 11 divide line 12 by line 11 and put on line 13. And we'll show you where that is in a minute because it's on a different page. It's on, hold on, they're talking about line 11, 12, and 13 on page 6. But remember, we're working the application backwards. Okay. Are we good? Because we have at this point completed one page, right?
The Schedule A worksheet.
Yes. The PPP Schedule A worksheet, which is actually 1.5 pages. So 1.5 of 11 down. All right. The next place we need to go is to page 6. So we're going to complete the PPP Schedule A worksheet table 1 totals. All right. This is actually easy to do. So on page 6, and here I will show you. Don't you love how fancy I am? Right here. Where is it? It's line 1, 2, 3, right here. And you are going to pull, remember when we had line, I'm going to go back here and show you. We have box 1, 2, 3. Box 1, 2, 3 match up with line 1, 2, 3 on page 6. Then you're going to complete the PPP Schedule A worksheet table 2 totals. That's line 4 and 5, and they want the answers from box 4 and 5. Okay? The third is complete non-cash compensation payroll costs. So here's what those are. They are employer contribution to employee health insurance, employer contribution to employee retirement plans, and employer state and local taxes. And one of the things that I want to talk about here is we're only talking about the employer part because the employee part gets picked up in gross pay. When you're pulling those payroll reports and you're looking at how much the employees, like how much of salary can be forgiven or how much of pay can be forgiven, you're taking their gross number, right? So the gross number includes what they take home, what they put into their 401k, the taxes they pay, all of that is included in their gross pay. So that's why you're only looking at the employer portions here. So that's lines 6, 7, and 8. All right. Step 19. I think we only have 22, so we're getting close to the end. And we will take more questions unless you've all decided that you can't handle any more. So fill out the owner's compensation. Here's some things about owner's compensation. So we're now on line 9 of page 6. We got on May 22nd, last Friday, the interim final guidance told us that draws are included. We did not know this, all right? So if you keep your salary low and you take draws, you can actually put draws in here. Do remember, if you are, if you do this, if you're choosing the 8-week period, you are capped at 50 seconds of your 2019 take home, or $15,385, whichever one is lesser. And Pam, we talked about the employee, the owner health insurance and retirement, and we decided that that actually gets counted in insurance and okay, on the employer part. Okay, so we're close. And Kim, you're saying you're not getting an answer to your FTE question. Can you put your FTE question in there again? Yes, the 850 seconds includes both owner salary and draw if you're an S Corp. We're going to do another quick question. We created a simple IRA program during the 8-week period. Are the matching contributions forgivable or only if the plan was in place before 215? I'm going to go with yeah, they're going to be forgivable. What do you think, Pam?
Yep.
Awesome. Okay. If you are a one-person business who pays yourself as the sole employee, do you calculate yourself as an employee or as an owner? You are always an owner. I don't care if you get a salary or not. I don't care how you get paid. If you're an owner, you're an owner. If you have multiple owners, you're going to have to create another grid, another worksheet. They don't give you one, but where you show the other the other owners. All right, so the last thing we have to do on this page, because we're getting down to the bottom of page 6, is that FTE reduction calculation, okay? And it is simple. They're gonna ask you for your average FTE during your chosen reference period, right? Which was the 420, the 215 to 426, or the...
No, the reference periods are...
No, that's the reference period. Your total average FTE is actually lines 2 and 5. Those are from the first worksheets that we did.
Right. So your reference period is compared to your covered period, and yes, the reference period can be 2/15/19 to 6/30/19. It can be January 1st, 2020 to February 29th, 2020.
Wait. Don't freak them out. It's on the application.
Okay, I'm just saying you got 3 choices.
Okay, Kim, I'm going to answer your question really quickly. You had 5 people on 215. She laid people off in March. So in April, she had 3. In May, she had 3. She got her PPP money on May 7th. Does she have to have 2 or 3 more people hired by 6/30? Do you have to have 6 extra people hired to make up for not having the extra 3 in May? Nope. You just have to have 5 on 6/30. So there you go. Okay. So you do the FTE calculation, and then you do the easy part. So now we go to page 3 and 4, and you fill out the biographical data, and you insert the totals. And you know what? After that, I think you should take the rest of the day off.
Okay, see ya.
I mean, it's rough. And there are a couple of other things. Like, there are options, because I know this is a lot. Someone said their brain hurt. And I think it was Kim, we have resources and options. All right, if you go to our website, cathcap.com/PPP Forgiveness, we have all kinds of things that you can download for free. We've got, if you need to know how to pull the information out of your
Payroll.
If you need a checklist of documents that you're going to need to fill this out and keep, we've got that.
Because in addition to calculating all of this, you also have a whole list of supporting documents that it's likely that your lender should be requesting from you to support the things you've calculated.
There's also a list of documents that you have to keep for 6 years in case you come back and get audited. All right, yes, even though Kim laid them off before she applied for PPP, she's got to get them back. Oh, Kim wants to know how much it'll cost to hire us to do it. I have an answer for that, because yeah, we will do this for you because it's hard. There was a great quote recently in, I think it was Forbes magazine, that said you need an attorney, an MBA, a CPA, and an advanced mathematics degree to do this. And, you know, I can't say I disagree. And luckily we have almost all of those people on our team. So we spent 2 weeks figuring out how to do this. All right. So we've got a couple of fun facts here. The EIDL loan advance, it's going to ask you if you got an EIDL loan advance. Nowhere on the application will it subtract it out from the forgivable amount. But let me tell you, when the loan gets forgiven, the SBA subtracts it out. So there, if you got an EIDL advance, you will not get 100% of your PPP loan forgiven. The great news is that the amount of your EIDL advance you've got 5 years to pay it off at 1% interest. So it's going to be cheap, cheap, cheap to pay off. But just so you know, expect that. All right, the second thing is the forgiveness timeline. So you'll notice that one of the things we said changed was the payback period. You had 6 months from the time you got it before you had to start paying it back. Well, so if you had 2 months to use it, 8 weeks, and then the bank has 60 days to decide if they're going to do it, that's another 2 months. Now we're at 4 months. And then the SBA has 90 days, 5, 6, 7, yeah, like we got too many months here. So we're now over. So what they have said is that your payback period begins after the SBA has rubber stamped the forgiveness amount of your loan. Okay?
Brooke, we have a really good question.
Yes.
So Reed asks, who is the ultimate arbitrator of the forgiveness application in case you don't agree with your bank's decision?
You have 30 days after the SBA makes a decision to appeal that decision.
Right,
So,
but let's say that your bank doesn't give you full forgiveness and you want to get the SBA's attention and say, hey, I think I deserved full forgiveness, in case you don't agree with your bank.
I don't know, I think I would talk to your bank first, and then what do you think? That's an interesting question.
Yeah, I would be surprised because, you know, we find we have been led to believe that banks will do everything they can to get you forgiveness. So I think that, yes, I would have a conversation with your bank. And if you don't get an answer, you can always, you know, email us and we can see what we can do to find out who you would talk to at the SBA if you don't like your bank's decision. But yeah.
Okay, so the next thing is audit risk. Originally, they said that any loan could be audited. Then we got interim final guidance that said if you got less than $2 million, we're not going to audit you. And we're going to basically say that there's a safe harbor, that you got it in good faith, you used it the way you were supposed to, and you got forgiven properly. And then we got more interim final guidance that basically repealed all of that. So at this point, the SBA is saying they can and will audit any PPP loan that they made, okay? And then this is just another fun fact. Treasury thinks that this whole application process is simple. We have a different definition of simple. Okay, so now let's look at documentation. So there is this list. You can download it for free on the website. Mortgage interest, copy of the lender amortization schedule showing your payments. Okay, that's the documentation you have to have to get your mortgage interest forgiven. Rent, so this is any kind of rent, copier, major piece of machinery, a leased car. You have to have a copy of the lease plus canceled checks or payment receipts for any payment you're trying to get forgiven. Utilities, you need invoices from February of 2020. You need all of the invoices that you paid, plus the canceled check, payment receipt, or statement showing the payments. Okay? It's a pain in the tuchus. There are actually more. Go to cathcap.com/PPP Forgiveness to get a more detailed checklist of everything that you need. But these are the big ones. And these are ones that, whether you choose the 8 weeks or the 24 weeks, go ahead and start collecting it now. Like, you got to go find your lease. I'm not entirely sure where my lease is. I'm sure it's in some file folder that says lease on it, but I don't know where that is at the moment. Okay, so let's talk about some things that we can help you with. There is a whole lot, if you want to do this yourself, there's a whole lot of stuff on our website that you can download and use for free. How to get the information out of your payroll system, the checklist for the documentation you need. That's option one. Option two is we have a fabulous spreadsheet that will calculate all of this for you. We think we've made it pretty simple. We had an MBA working on it for 2 weeks straight, and then all of us tried to break it. I mean, this was really a group thing. It is still slightly tricky to use. You're working with a lot of data. And you can download that today. It's $99 and go for it. And then the other option is we can do it for you. If you have less than 50 employees, you can do a data dump of all of your payroll, send it to us, answer. I think we've got a 15-question questionnaire that needs to be answered. And you do that, and you can put it on our plate. If you have more than 50, if you have 50 or more employees, and this is employees in February as of that February date. If you have 50 or more employees as of February 15th, it's $1,500. All right, and Pam is like working through all the questions, and oh my gosh, it is $3:59 here. Do we have any more questions? Is there anything we can do to help people? Someone missed part of the FTE calculation. Do we know yet how they will handle resignations? Yes, if you can document that resignation, you get to say they still work for you. So that's exciting. Okay, Pam, what are you thinking?
I'm just hoping that the day is done and that the cocktail hour can start, because this has been a long couple of weeks for everybody. Somebody's asking us if we're going to make the Q&A and the slides available. We're going to make the video available, right?
The video is going to be available, so you can see all of that. And the Q&A, Pam, we answered a lot of Q&A on.
But most of the Q&A, you know, is individually specific. I think that if you have more questions, that you can email us, and we'll be happy to reply to you that way.
Yeah, and those are our email addresses. You can get either one of us. I'm Brooke, that's Pam. So that's what we're doing. So someone has a question about documenting their resignation. Did they resign in writing? If they didn't resign in writing, you need to send them a piece of paper and have them sign it that says, I resigned of my own free will. In general, whenever anybody resigns, you want them to do that. It protects you. It actually means they can't file for unemployment. So you don't have to point that out to them when you're asking them to sign the piece of paper saying they've resigned, but do that. Okay, let's talk about PPP funds and tax deductions. So the intent of Congress when they drafted the CARES Act was that this would totally be free money. So what they did was they put in the act saying, well, normally when a loan gets forgiven, when you still have money due and it gets forgiven, they say, okay, fine, you owe us $50,000. Now you don't owe us $50,000. But oh, by the way, here's a 1099 saying we forgave $50,000 and you have to put that as income on your tax return. So Congress didn't want that to happen. They said, can't do that. Treasury said, great, but we have this rule about double dipping. So while we won't ding you on the amount that gets forgiven on your taxes, you cannot take those expenses and put them on your P&L as a deductible expense. So if you got, let's say, $60,000 of PPP money, you spent all $60,000, you got all $60,000 forgiven. When you file your taxes at the end of the year, unless Congress makes another change, at the moment as it stands, they will take $60,000 out of your expenses. They're just going to disappear. So your revenue is going to be $60,000 higher than what your P&L says for tax purposes. So they're not giving you a 1099 saying it was forgiven and adding it onto your taxes, but they took away those expenses. So it's going to have the same net effect.
As being taxable.
Yeah. So I think that especially people that got some of the bigger PPP loans, the like 50, 60, 100, 150, we've got some clients that got $500,000 in PPP loans. You need to realize that if you break even for the year, your taxes, you can't take $500,000 worth of expenses. So you're going to have to pay tax on that as profit. Partnerships that receive K-1s, they don't figure into the PPP loan. That's correct. Do we have to disclose owner compensation when the little we received was clearly used on payroll and rent? I'm confused by that question. Marjorie, you want to like give me a little more information on that one? Oh, okay, wait a minute. I think I may know. Do you have to, on the forgiveness documents, say this is how much the owners got when you have used 100% of the funds on rent and payroll? You can, the only rules say that you have to use 60% on payroll. So for instance, my team is bigger this year than it was last year. So like, I can't even claim all of my rent. I mean, my payroll eats it up, period. I'm done. So I'm not chasing around utilities or leases or anything like that. So no, if you can get it all forgiven without putting what you took in there, then that is totally fine. And you can do that.
So Brooke, one of the questions that was asked that I answered, I think this question refreshes a point that's I think worth noting, is that when we went through and we saw this with our client base, that because it's a bank-based process, that there was great disparity between the applications, the documentation, the questions during the application period. We fully expect that there will be similar disparities in the forgiveness process that some will go fast and loose and others will be hyper-focused. So I think that, you know, we can't anticipate, you know, what banks are going to do or how they're going to audit the numbers that some banks may not even audit it and just rubber stamp it and send it on to the SBA, while others might, you know, think that they're the ultimate auditing entity and ask you for far more documentation. So,
yeah.
So when you're talking to your friends, just know that this is still a bank specific process. And someone just put in that he's called his bank, which is American Express, and they have no idea what to do yet. Yeah, I get why they have no idea what to do yet. One, it's complicated. Two, they have some liability. And three, we don't have all the answers yet. Right?
Yeah.
We just
Rules
got
change
legislation
today. Rules change today. I do think one of the things that was consistent across the application, which I think will be consistent across the forgiveness process, is the Treasury Department has released this 11-page application. I think that you are going to see all of the questions that are on here on your bank's forgiveness application. They may not be in exactly the same order. They probably will be. The format might look slightly different. I think where the real difference is going to come in is what documents they want to see. But there are some that were mandated, and so you're definitely going to see that. And then, like Pam said, every bank's going to go kind of from there to what works for them. Okay. Pam, I don't see any other questions coming in.
I don't either, but Brooke, I have to believe that there's people out there with specific questions that may relate to a unique scenario that they have. And again, feel free to email us at brooke@cathcap.com or pam@cathcap.com, and we're more than happy, you know, to hop on a conversation with you, and know that, you know, give it a go with the tools that we've put out there. And if you get overwhelmed, you know, just understand what's at stake here. You know, you're not meant to suffer. I don't believe through this process alone.
Yeah, we're here and we're going to do everything we can to help you. You know, and I keep sending people to the website. There are options on the website. Pam's right. Thank you, by the way, and including your email address, Pam. I thought you were going to throw me under the bus and say I was the only one that was going to answer email. And it's interesting. One of the questions we just got is, are we going to do another webinar? And Jen, I don't know if we're going to do another webinar. I don't know if, yes, we do webinars. We do every Tuesday, and most Fridays, we do a Facebook Live. If we don't do a Facebook Live like today, we do a webinar. So if you connect with us on social media, you can always see what we're doing. Every Monday, we publish that week's schedule. If you guys feel like we need another webinar, let us know. Tell us what you want it to be about. Yeah. We're here to help you. I mean, do we want to do a half-day workshop? I'm making this up as we go. Pam's hyperventilating. Pam's like, no, we don't want to do a workshop to help people get this done. That's probably a really bad idea on my part. But like,
oh, but you know me, Brooke. As soon as I spend a certain amount of time with people, I fall in love with them, and I'll do just about anything to help them, which, you know, doesn't always work well. But I think that what you're saying is, if there's something that you want us to tackle and we get enough people, that, yeah, we'll do another one. If we feel that there's enough change in the information that's out there, we're going to do another one on this topic. If there's another topic, or there is someone some type of expert that you want us to recruit to come on, challenge us. I mean, you know, we're here we are lifelong learners at CathCap, and we're happy to be a resource. We're happy to be a conduit of learning for you. Okay, we got another question here. If the 2/15 date for the employee count is regardless of when you applied
For
and received the PPP, or is that the nature of your business?
nope, 215.
Yeah.
215.
You have to
You're
jump
looking for
through.
a baseline is what they're looking for. And so they have chosen the date of 215 to be a baseline. And that is one of the comparative periods. So it's on the application. It's
You never did this, Brooke. How many different iterations that you could come up with?
Don't make them cry.
Okay.
Yes, there are a lot of reference dates. We're not going to make you cry. Read the application, read our website, ask us questions. You can go online and we can just do it for you. And you can buy that online. We're happy to do it for you. We have one of our CFOs has said that she will do almost all of them. And she says she can handle up to 100. I think she's ridiculous. But I don't know that we're going to have the ability to do 100. Maybe with the new 24 weeks. But you know, we want to help people. So.
Okay, we have a new question in the chat. But you know, Brooke, I know our clients aren't on here, but you know, part of working with us on an ongoing basis, this is all included and we tackle this. And it's only because we've struggled with our client base that we thought that we would offer it for non-clients. Because it's overwhelming. Gina asks a question here. Do we have details yet on which retirement dollars count in the forgivable amount? For example, profit sharing, safe harbor, matching.
I'll take that one. Can I take that one?
Take that one. Go for it.
Yes. Yes, they all count. All employer money put towards retirement. Whether it's paying a safe harbor, profit sharing, matching, I don't care what it is, if you paid it, it's forgivable. And then we have another question. If I choose the 24-week period and the funds run out by week 10, how does that work? We don't know, Beth. Yeah. We have no idea. You know, they just signed the 24-week legislation today. I'm guessing hopefully they'll come out with that pretty quickly. So, you know, we're hoping. Gina has a follow-up question with her details on retirement dollars. She says, wow, even if it's outside of the covered period. So 2019 profit sharing that haven't been contributed yet, can they use PPP money to do the 2019 profit sharing or use it for 2020? Well, I don't think you can use it for 2020 profit sharing because 2020 is not over, so you don't know how much profit you have, so you can't possibly profit share in month 6 of the year. If you tried to use it for 2020, that would be considered prepayment. Yes, you can use it for 2019. Pam, my question is, how does that money show up on their W-2? Will any of that money show up if they're making a contribution? Does that money show up on in the employee's gross pay? I don't think it does. So it would.
That gets into the great definition that we have here in the official guidance on what cash compensation is.
Where's my cash compensation?
Right.
Eligible payroll costs. Yes, this is what we do. This is why our things are so dog-eared. Let's see. Payroll cost incurred not paid.
Cash compensation is on page 7.
Oh, I'm on page 2. All right.
Enter the sum of gross salary, gross wages, gross tips, gross commissions, paid leave, vacation, family, medical, or sick, not included in the Families First Coronavirus Act, and allowances for dismissal or separation paid incurred. So that does not appear to be.
Yeah. So it looks like, yeah, if you need to eat up some PPP money, you can do that. Do realize that that will be, oh, no, that will count towards the 60% that needs to be payroll costs. Okay, so that's awesome. Do we have any other questions? Pam and I
have a question, and this is a good question. It's about cash compensation for people that make more than 100,000. There are separate buckets. One is cash compensation and the other is non-cash compensation, and retirement dollars is in a separate bucket. So employer matches for 401ks are not subjected to the 100K threshold.
And there's one other point that I wanted to make about that. So, you know, we can cap at $100,000 what we pay people that can be forgiven. But there is no cap on the employer, state, or local taxes. So if you're paying them $200,000 a year and you have state and local taxes that you've been paying at the rate of $200,000 a year, you do not have to prorate that. Because Pam, you're right, that's not part of that $100,000 cap. So you can ask for forgiveness for all state and local payroll taxes, no matter if it was paid on someone making less than 100 or more than 100.
Brooke, you and I have been around the block long enough to know that there are banks that could have different interpretation of these rules than we have had.
Absolutely.
So at the end of the day, if your bank disagrees, we have seen people reach out to their banks and educate them during the application process, and the bank said, "Oh, you have a good point," and they agreed with the borrower. So you know, if they come back to you with questions, you can absolutely challenge them and communicate with them, and perhaps win them over.
Yeah, I think you're right. And David wants to know when he can get a copy of this webinar. I'm going to do a little bit of editing. So, because it was recording for about 5 or 10 minutes before we started while Pam and I were getting situated. And then I will email it out. What day is it? It's Friday?
It's Friday.
Can you guys give me until Monday? It might arrive sooner, but it might not. Is that all right? I'll try to get it up.
I think it's important to know that there's no urgency to get forgiveness. You know, they're not gonna, the loan payments aren't going to be due until the SBA approves it. And so, you know, there's no hurry, I guess, unless you just want to get it off your to-do list.
Yeah, and I think that's a great point. There was so much urgency to get the money. They're gonna run out. They're gonna have, like, everyone was just a freaking wreck, and it was all over the news all day. You've gotten the money, so go ahead, take the time, do the math, run the numbers, have us do the math, have us run the numbers, make the best decision that's for you. You've already gotten the money. And worst case scenario, worst case, this new legislation says that if you haven't done anything about forgiveness for your loan before the end of October 2021, then you go into an automatic payment status. So, but you have until October 2021. October, that's not, I mean, that's like 14 months from now. 16? I don't know. I can't do the math. It's June. It's month 6. We have until month 10 of next year. 16 months. You've got time. Make decisions. Now, I will tell you, because I'm pretty vocal, I'm pretty transparent, I want this off my books. And so Brandy, my banker, knows that the day this opens up, I'm going to be ready to go and get this done, just because I want to check it off my list and be finished with it. But you don't have to do that. You've got time. All
Plus
right.
your tax consequences, I think that you can also do if you want to defer the taxability of this to 2021 because of other transactions that you have. Don't apply until 2021.
Well, and it's interesting, someone else just put on here that they want to get it off their books because they want to go for a Main Street loan. So, you know, every situation is different. Everybody's got different things that they want to do and different reasons. So we still got a bunch of people on. I hate to hang up if you guys have questions. Any other questions? If not, we're going to end because I like you guys, but I don't want to sit here with dead air. All right, questions going once, going twice. If you need to just say wait, hold on.
Situations, don't hesitate to email us or call us.
We're here. We answer our phones. We're pretty responsive on email. You know, we're here. So we want to help you. This has been a stressful time for everybody. We get that. We understand. We geek out on some of this stuff. And our commitment to people was that we would, during this period, share information as much as we could freely to help people because it's stressful and it's detailed and we do.
And a lot of entrepreneurs, this is not their resident skill set.
Yeah. And truthfully, we want to help you with this because we want to get you back to doing what you do well, which is running your business. So, okay. I think we're going to call it. You good, Pam?
I'm good. Thanks, Brooke.
All right. Thank you, guys. I really appreciate you sticking on for so long. Have a great weekend.
Take care.
Bye.